Okay, g'day Pete. Hope you can hear me, mate. Let me know if I'm coming through and I'll rip into it. Check that I've got everything up and running. Nice work, mate. Nice work. Did you do a bit of, was it sailing on the weekend or? Yeah. Look, we'll get up and racing. Um, Welcome to Trade Setup and the live stream, the 9th of, 9th of December. So I hope we're all going well. Hope we had a good weekend. Certainly think there's something wrong with YouTube, but no one watching. But I'm speaking to someone. Well, I hope I'm speaking to you, Pete. Anyway, we'll just keep plugging away. Um, yeah, welcome along. Hopefully we have a good day today. It looks like the US finished off the week with a bang on Friday night. They come out with their payrolls, US payrolls, which are a lot better than expected. Well, not a lot better, but better than expected. Rates dropped. Another Trump was out there again spooking the US trying to trade a deal. So it seems like everything's going along smoothly, especially in the US where you got the one thing holding up the economy, economic growth over in the US is the consumer, and the consumers are, I think they're saying the average pay levels have been increasing. So wage gains leads to more spending and so on. So it's going to continue to support the economy, especially with jobs, well, the unemployment rate dropping and new jobs being created. So like you read, is you don't create new jobs in a weakening economy. It's generally if things are slowing down, you tend to just hold off on hiring or you fire. It's as simple as that. You want to try to keep profitable. So it seems to be that's they're kicking along nicely over there. US ain't going to cut rates anymore. You wouldn't suspect until something dramatic happens. I think it's the rate cuts over there have been enough. It's not going to help the Trump and his weaker US dollar, but US dollar bounced also, which is a good thing. So I think it probably sets us up for a good little rally into Christmas. Not that there's too many days left in this year anyway, but a good little perk up into Christmas. And don't be surprised if we kick on strong. I mean, last year, I remember coming in, was it just after Christmas started rallying when the market's pretty much asleep over the Christmas period and or very light on in the way of volumes, and it could kick on strong. It really kicked off a good move, and that's been continuing on pretty much till now. Still going into new highs. I think they just missed out from closing into new highs in the US. All that said, the ASX has opened up. They opened up strong, but it keeps backing off. We are just. I feel that the ASX 90% bears, and they just never convince. They take a lot of convincing to actually start buying into the market, but we're hovering just below all-time highs as well. Whereas the US keeps making new highs. The DAX and FTSE made new highs years ago. Um, Back up there again. I think the DAX is close to new highs again. I suspect. I can't remember the exact levels. We'll take a look at that in a minute. What they did, the news out on Friday, it's not so much, I mean, trade talk, we all know that Trump just says what he wants when he wants, just to make sure that that market keeps ticking along nicely. An opportune time to come out on Friday night when they've had some really good jobs numbers and start talking up a deal again, yet nothing's happened. Not a thing's happened. That's the funny thing. The talk of a phase one deal was back in October. Nothing's happened. Absolutely zero's happened. Just a lot of talk. Market's been chopping around, but the thing is, it keeps drifting higher. So until something changes, something new, it's going to continue to drift higher. Now we've got, was it in 6 days or so? The US is due to raise tariffs again on China. So I think if something's going to happen, it's going to be in the dying days. So a couple more days yet till maybe there's a bit of a fluff deal, or there is actually a phase one deal, or if nothing happens, then expect the US to go ahead with the tariffs. They're probably committed. If China does not pull the trigger on something, doing something, or sign off to something, then they'll probably just raise tariffs again. So it'll be interesting to see how that goes. That's probably what's cooling us a bit, because all in all, we're not stupid. The ASX is not stupid. It's reliant on the US trying to trade deal getting through, China soaking up commodities and things like that. And we have been dependent on that for quite a while now. Now, if nothing happens in that respect, then why? Yeah, UK election too. I said this Thursday, is it? Going a bit slow on what's happening in the UK. That doesn't bother me too much. I know you look at it for currencies, but with regards to the Aussie market, yeah, it could bring a bit of fire. And I think what is it? Boris's lead has come right in, has it? According to the polls from the last I read. So maybe he's not so confident of winning, which could throw a bit of turmoil into Brexit. It's just again, it's been years coming, but be interesting to see how that plays out. So that's Thursday. Thursday, see what's that night our time. So maybe we'll find out early hours of Friday. We're going to wake up and see what happened anyway, I guess, and see what that means to the market on Friday morning. What was I saying? I'm pretty easily led astray there. So yeah, US. I expect US to keep ticking along nicely. We'll wait and see what happens Friday. I think it's Friday, is it? No, 6 days. It's over the weekend, isn't it? Tariffs are due, I guess, to go in over the weekend. So 9, 10, 11, 12, 13, 14, 15. So it's Sunday night, kicking Monday. So we could come to an almighty storm on next Monday, but we'll see. So it's probably what's keeping our market a little bit sedate at the moment, but we'll see. Um, so we're only 8 points at the moment. We've been higher than that. If you go to the ASX intraday, we opened up quite strong up at 67.40. We've drifted, what's that, 25 points lower from the morning's highs. Retested that. We might come and just consolidate below here and start to drift, back up into the close, make back some of that lost ground into the close, which would make a bit of sense. I don't think we should be too weak today after what a good session in the US. And on top of that, you got things like oil kicked off, copper kicked off. Copper just spiked hard. If you go and look at when the numbers come out, I think it's at 12:30. Payrolls come out. That's Melbourne, Sydney time, 12:30 Friday night, and the US opens an hour later, and pretty much things spiked. US euro dropped like a stone because the US dollar was spiked. Copper spiked, which is your trade link, which is a good sign. Crude oil spiked also. That took off, not as quite as hard, but they also had OPEC talking up cuts for, was it 2020 on production cuts. So that's going to be supportive of crude. So this is what I want to look at today, is just where potentially we could find something, with more of what's happening with the commodities, say crude. Crude starting to find a base. We've spoken about it before. I think it's looking quite bullish at the very least. Maybe not super strong, but it is still weighed down by trade and trade wars and tariffs and all that. But it is over the longer term holding up a bit. And so we'll look at a couple of oil companies, energy companies. Look at gold. I don't know if gold is going to get the yield. I think with gold at the moment, buyers are getting a bit fed up with what's going on. They just keep nibbling back into it. It pops back up. They look at the bull market's going to go. I mean, people love buying into gold. They love gold stocks, physical gold, but it's just not trading. It's sort of range bound at the moment. I was just looking at Aussie gold at least, which you might get short-term gains into some gold stocks when you get a couple of buck rally into gold, and then bang, it dropped 18 on Friday night, $18 on Friday night. So it's just anyone sort of bought it up at the end of last week on like a safe haven, it's just got smacked down today. So gold, we'll have a look at that. Look at oil. Look at not really copper. I'm not sure. I was just trying to find some really good copper stocks. Nothing stands out too much. A lot of the ones I'm finding are real small caps. So although they can look really good, they're probably not where you want to put too much money into it. And it's more news driven, I guess, than anything else. What else are we going to just look at? So we'll go over a few of those, and then at the moment we've got, I think, 6 positions on. 6, all doing okay today, except for some reason MGX is not playing ball. Yeah, it's coming down for whatever reason, and I think FMG is doing okay, so they've backed off a bit. I don't know. I haven't actually looked at what iron ore's doing, but we'll see where they are. That's probably about it. So let's get into it. Any questions? Anything you want to take a look at? Whack it into the chat. Codes. We might take a look at some currencies. They also want to look at the US dollar, what that's doing, where that could be leading things. So we'll start off with. Actually, we'll start off with the ASX. I'm going to use my trading view. So don't forget, if you join us, if you jump into trading view, it's really good for your overall markets. You can put anything there. It's really good for charting too. If you're right into your charts, you can follow us whoops, I can get rid of that. Trade underscore setup, you see the top right hand corner. If you want to search, click on the ticker, and it's free to sign up. Just sign up, make an account, play around with the free stuff there, delayed prices, but it's really actually good for um, scanners as well, for your equity scanners, which play around with those are really good, which you can get from stock screeners. You can play around with the filters, all that sort of stuff to start building a scanner that can scan the markets. I think it's great. But yeah, join us there. Just click follow and you'll see that pops up any ideas we come up with. I'm using this mainly for currencies and bits and pieces. For the trade setup with stock alerts are still coming straight through to the app because that's a paid subscription. But everything else, just for ideas and bits and pieces that could be interesting, that could be moving the market, I like to use TradingView. It's quite good. So let's go over to XJO. So we can see we've had that, and this is probably not so concerning as such, but we've had the resistance. So we popped up to resistance, had that good little rally off support at 66.25. This is on a daily chart. It was quite good. We popped up there, but then we just stalled. New highs would not go any higher. So, again, there's that headwind that's going to kick us on that we want to get into new highs and just really be bullish. It's just hard at the moment at this stage because it is quite a few headwinds. And then we got smacked down quite hard. Considering what the US did, I think the US has bounced back. Maybe after Friday night, they pretty much made back all those losses, and we haven't. We've come back 50%. So that's what I say about a bearish market. The ASX is, I think, notoriously bearish. They'll drop the same amount in percentage terms, won't rally back up in percentage terms the same amount as everyone else. We seem to be very much sedate on the moves up or the gains, but happy to drop with everyone else. So it looks like we've got that support. It's not really a key. It's not a hard and fast level. It's a zone, and we're looking at 66.25 zone. Maybe the bottom there. Well, the bottom end now has really got to be around 65.60 up towards 45, 66.45. So what's that? About 80, 90 point zone, and it's touched in there. You can see we've come off. So we've got this rising support. Market's still heading high until that breaks. It is struggling. It's like we're happy to be capped in between that range between the highs and lows. But it is holding higher levels, so that's definition of an uptrend. Higher low, higher low, higher low here. Of good. We kicked on a bit here, come straight back down. It's probably better seen on a weekly chart. But again, higher low here, got up to the new highs, traded into new highs, fell over end of last week, or was it Wednesday, Thursday last week? Is that right? Tuesday, Wednesday last week, sorry. And then straight back into the zone. It's really just testing this rising support here, which you probably, when you're watching it, I was expecting, okay, there's a zone here I wouldn't expect times like this when you've got that support that's you've marked up and it's only a few points under a support zone or a support level. More often than not, they'll just go through it and it's just a big washout. And the way it's rebounded is quite good. It's quite handy to see that it's rebounded. So for me, I think we popped up enough. I would like to see this come back and retest at a higher level. Get that inside higher low and then start working its way back up to the highs at 68.60. And even if we're not bullish with everyone else, it sort of makes sense. And if we're still worried about trade wars, then you've got this impeachment seems to be coming into the news more and more. Like Trump impeachment, it looks like they're going to try to impeach him. And from everything I read, but then again, it's only one-sided news, is all they've got enough evidence to impeach him, which probably wouldn't be so good for the US. But we'll see how that goes. So if that's the case, then we've still got some headwinds. I'd expect us to be capped again at the highs and then start to drift below until something's worked out in the way of trade wars or impeachment just becomes a bit of a, not a publicity stunt, but political stunt from the opposing side. I can never remember. I think they're the not Democrats, the other side. But anyway, yeah, so that could just chop around there. I mean, it's more than enough room to move between the highs and lows and again, retest at a higher level and back up to the highs, then pull back to retest at a higher level. It's just to chop around a lot. But it doesn't mean there's not going to be some gains to be had on the ASX. So I still think, so that's what I'd be looking for. I don't like the action today as such. I think it's kind of, we'll see what happens into the close. The market can easily make up 20 or 30 points, start drifting higher from here and end up 20, 30 points by the end of the session, which would make sense too. Just seems that that little bounce off that support zone. Don't be surprised if the US gives up a bit of gains over the next couple of nights. We edge our way lower and start to hold a higher level, that would be a great sign, because then it just means that that higher low is going to lead to push up through these highs at least to 67.38 or 40. And then just from there, I just expect it to drift higher up to 68.60. Let's take a look at, just want to go to big S&P. So I just missed off the highs. That's still well and truly an uptrend. It's still intact. It's just this leg up here, whether or not, we had a good flush out with that move off the highs, whether that's enough or we're going to start failing here and have a deeper correction, or maybe test back down to 69 zone, that 30.69, because you can see the anchor to that uptrend, all this trend up here, was really around there, and we broke that. Finished above it, which is always a good sign if you're bullish, but if you break it and finish below, it's not a good sign. It just means that there's no bulls at the end of the session or the end of the day to bring it back up and finish it back above that zone. But it pretty much finished right there. Next day is up. The next day after that, test and lows, wash out a few of these couple of session, I guess, buys, and a bit of a pullback, finished back up okay, then gapped up and finished on the highs on Friday night after the number. It's a really good session Friday. But either way, that market's probably trading to new highs, I would expect, on the open tonight. On the S&Ps, that's a broader market. The Dow had a good night, much of the same sort of action. It's been really pressing higher off the zone right back down at, say, 25,750. Again, same sort of structure, wash out those lows. Wasn't quite as convincing as the S&P, so it'd be interesting to see whether we start finding some sort of pressure up here and start drifting lower, and then we have to go for a deeper correction before potentially start working our way back up again. It's just, remember, the markets are about fuel. It's not as such what's going on. It's always going to get to a certain price where if you're holding it long and you're up, your mental state's going to be sitting there going, well, how many people are going to buy it high if we start running out of steam? Okay, it's not the time to continue to hold into all-time highs and expect this mad rush into new highs. So that fuel that's been long, late in the trade, is late in that session, once you broke through these previous highs, is going to start to think about it. If they weren't washed out here, second time we get up to the highs, maybe you get that head and shoulders, whatever they're looking at. Maybe they're sitting there going, oh, look, I'm sitting to profit. Good night on Friday, but if we can't kick on for the next couple of days, it just means that headwind in the way of trade war, in the way, raising tariffs on the 15th, and also Trumpy's impeachment, is all going to just weigh on the market again. Let's just book the profit, or at least take some off up into the highs. And if you haven't got enough people to support the buying, it's going to pull back, obviously. So I think it's a matter of that. The markets at the moment, gets extended a bit, has to wash a few people out on a pullback and go again into new highs, pull back, wash a few people out. It's just the nature of the beast. I don't think that's geared up too much, what the fundamentals are saying. Fundamentals are saying longer term trend is up. US economy is still expanding at a slower rate. They've done everything they had to, cutting rates. It's all looking good. That should support our market. It's all, I guess, for us, it comes down to what's happening with the trade war and everything. Let's go to just quickly look at the DAX, where they're standing. DAX, I think their all-time highs this up. Yeah, it's up here. Was it 13.5, say 13.600? We're around 13.1, so about 500, 450 points away, give or take. Is that right? Yeah, 450 points away, which you can do that in a couple of sessions on the DAX if it gets a good head of steam. But you can see that kind of price action stretched up here, rejected it, pull back, tried again, had a deeper correction. So if this is a deep enough correction, it's going to drive higher. If not, it just has to keep cleaning out a few buys, with some price action, something like that, drifting lower until it starts to maybe find some buying interest that's willing to buy at this level because they think it's fair value. Okay. And US, sorry, that's the UK, Brexit coming, or not Brexit coming, what do you call it? What do we say? Elections. You're saying Thursday. So, they've been struggling sort of at this level. It was edging higher, and when they got the sell-off, bang, it got smashed, grinded all the way back up when the US is making new highs, and then they've been pumped over the last week, straight back down again. You can see this move down here. So it's still stuck, I'd say, just say within sort of this range. I think it's more range bound than anything else. And until this level breaks, if this comes through here and breaks that level and then we hold a lower high, then there's going to be problems with the UK. This level is potentially a lower high, but it's not confirmed up until, it's going to break either way, really. That could be a lower high, that could be a higher low with regards to this price action, your longer term level here, higher low, Another zone, it's going to be a high low, press up into new all-time highs through 8,000. That is a possibility. Also, the possibility you can see we've got high here, high, whoops, very bad drawings, and then another failure there. So you got 3 times it's tested up to near the highs. The last time it failed to get up to new highs, whereas this time it pressed through into new highs off this pullback, good pullback, pressed new highs, fell apart, press up. If it's starting to run out of steam here and this becomes a lower high, then expect that to trade right down, test through 65 and potentially get really hammered. Not trying to be a doomsdayer, but that is the potential from this, just looking at that chart. But either way is not confirmed just yet. If it's going to trade low, it's going to get through there, then you're looking for that lower high to sell into, and away you go. If not, chops around here, you can see if it lift here, pull back, and then go for the upside. So that's pretty much most of the markets I guess we need to look at. I want to start just have a quick look at crude, gold, probably about it actually. So it's crude and gold. I want to look at copper. I think copper's got some potential, but again, I think copper, until something's worked out on trade, it's kicked off hard on Friday night, but it's just going to be a massive short squeeze. Short squeeze means all the sellers built up, turned around, have got squeezed back out of the market, and just took off. And it's a very thin market on the upside, as in no real sellers standing away, squeeze anyone that's been short, big bounce, and then just run out of steam. There's no one willing to buy it up there, then it could just start drifting lower again. But let's just look at that now. I'll keep going what I'm talking about. So you can see, technically, this is what we're looking at. If you're looking at some zones, we've had from way back in 2016, touch into highs, couldn't hold it, bang. And I don't know if that was when was the trade war kicked off. It's been for over a year. It's probably about then. Started getting hammered. Retest the lows, tried to lift, got a key lower high there as well. So you got a zone up there we're going to be concerned about. We've got another lower high in here. So the market's pressed down, retest this support and start to lift. Start to lift off that support is good because you got 1, 2, probably not really testing in here. Another test just in this zone here, back on the lows, and it's getting bought up each time. They're building a position for longer term. So it's really whether or not this is going to lead this move. And you can see the lower high in play that's pressed down, broke through that, pulled back, built a higher low in here. So this is what we've got our eye on. Higher lows led to a good rally on Friday night, which took the price straight up just through the previous lower high. We can see this is around 2.7295. Whether or not it's going to be a washout, and then this starts heading south again, we break this level, or we retest again down at this key support zone, or whether we get this kind of price action building, going all the way back up to the highs. Again, we don't know, and it's hard to favor either way, because we could just start getting weakness, and that could be driving down, so on, back down to the lows. I think this kind of move up has got to do with the trade war. More positive news. I know it's easy to say Trump, like I said, he just supports the market. China's happy to support the market as well. But behind the scenes, they're still bargaining hard. They want tariffs rolled back. And if they can't get them rolled back, what are they going to do? If the US said, no, we're not rolling back until you sign that you're going to do something, then we'll roll them back. So these two good, still at loggerheads, and I don't think that's changed for the last few months. They're happy to say with the market, we're going along nicely. Tell the market, and the market's happy with that at the moment. We don't care. Okay, if they're not going to tell us the truth, we'll just keep chugging higher until something comes out, and then we have to react. I'd rather react and get smashed from a higher level than smashed from where we are now. I guess that's the general theory. If you're buying into the share market, until something significant changes, why change the route, which is just straight up? So I don't think that is going to change anytime soon, but we'll see. So I think that will be the trade war. You're probably going to get these little drifts high, maybe a bit of a sell-off, and it's really slow price action. But either way, it's a good move on Friday, a good reaction. I don't think that was more. I mean, the US dollar rallied, which should be putting pressure a bit on commodities, because based in, and the price in US dollar is better at strength, so that's why they've kicked off. Now let's just see where oil did. See. Oil, this is the daily chart. What I like about the daily chart is this, longer term price action. It's massively longer term price action. You had the lows way back here in 16, and we've just been holding higher levels. We held in here, bids started coming in at this zone around, let's say 42, 30, 42, sorry, 43. This zone here, touched in here, and got this leg up, got smashed, retested, popped up, pulled back, spent a lot of time just supporting around the 51 mark, 52. You can see this support zone through here. It's supported it for quite a bit, and we're starting to lift again. There is still, the problem is there's still those lower highs in play, and until the lower highs are broken, we don't know exactly what's going to happen. We don't know when you could say, yeah, it's bullish. Wouldn't argue there because it's holding higher levels, but it's also bearish because it's got high up here, got smashed, tried to go again, got hit down again, getting capped again at 50.75, down again. I mean, this was that blowout because of the attacks on the Saudi oil, I think, that gap up, and it's just sold off straight away. So I tend to discount that a bit. It's more of reactive action. But in regards to oil, the good thing it's getting kept up because of just cut production. Simple as that. They want a high price, go and cut production. With OPEC and its allies and higher prices, I think that's going to support higher prices. But also, if China and that don't get their, lift their game a bit and start to come sort of agreement, I think that's going to cap it on the downside. Oh, sorry, it's going to cap it on the upside. So no one's going to buy into crude oil too hard. But either way, I think for me, it's on the right projection. It's this action, the last, since we made that low, recently tested the low around October, start of October. That's a grind. That's not a really bullish action. I mean, you've got this smash down, straight back up, hold the highs, not too convincing, got smashed down. Okay, we got bought straight back up again. That's fair enough, but it is choppy. This action is choppy, and it's probably getting. Is that what I want to do? I'm just gonna give it a second. I'm trying to clone. There we go. Kind of range bound. So I'd expect it to trade up to $60, $61 soon. Maybe retest that, and then we'll have to see what sort of price action happens. If it rejects there and it starts to drift back down, it gets sort of stuck in a range, or it's going to come back down suddenly and then start to hold a higher level and go again. We'll have to wait and see. It's tied to the trade as well. But I think there's going to be opportunity. You just go through, if you get a chance, just go through some stocks on oil, and you'll see a few that are starting. I think they've had a long-term base they've been building, and there could be the next sort of thing that if the ASX is going to tick off higher and we get into new highs and just keep going, I think that's going to be some good support from those companies, so especially the bigger ones, or it's going to be opportunity into some of those oil stocks. I just went over copper, didn't I? I went crude. Let's just lastly look at the US dollar. US dollar longer term, the trend's up, no doubt about that. We've had it capped here recently. It's come back down. There's no reason to say that it can't just, at least hold this zone. It may retest around 97. This is on the dollar index, and then start to lift again. Good rally on Friday night after the numbers. So, the reasons for it going down, why are they? Potentially rate cuts. They're not going to happen. I think they're off the cards for now, especially after these good data. Or at least in the near term, I think there's a bit more spurt to the upside to go in US equities, at least, for the bulls. I think it's going to be more likely that there's going to be bullish action over the coming months than bearish. And again, we always got to worry about what's happening with trade. So let's just see how that goes. I think they're supportive. Longer term, it's just keeps grinding higher. So that should be pretty good. That should be supportive of some maybe commodities over here. Or for us anyway, some commodity stocks here. Not so much for gold. I don't like Aussie gold just at this stage because I should go back. I was going to go back to the 4-hourly. It is range at the moment. As a safe haven, there was times when the US was getting knocked around a bit and sold down, and gold didn't move. It was only sort of after about a couple of days of, and then you got a bigger selling, heavier selling. Sorry, I spat it out. Is when gold got sold off, but it did spike up here, so it's sort of locked in that range of on Aussie gold anyway, 21.75 say, and down 21.30 or 21.35. And it's right down on support now. Now, if we sort of pop up and we start getting weakness as the US dollar rallies, as there's no need for safe haven assets, and around 21.50, I'd expect it to go straight through that support and then resume this sort of pullback price action. And there might be something, like that massive flag, which is not a bad sign at all, but we could be heading down to 21. What's that? Oh, yeah, 30, $40 drop from here. We just could do it, and then before it starts finding some bids or some buyers willing to jump in there and lift price action. But then again, I think Longer term, it's still stuck in this sort of this pullback mode for now. And if we go to the daily, and that, don't forget, that's after a really solid run up where we got right up to about 23.20, 23.25. You expect that, and this is bullish over the longer term, but we don't know when that's going to go. We don't know. And everyone's expecting down the track, the US just keeps going too hard. You've got the world's biggest bull market. It was 11 years or so. And the US just keeps ticking along, and obviously supported by debt. Interest rates are dropping, and not a good sign. We've still got growth in the US. We don't have really growth in Europe, in Australia. We're cutting rates. So all these sort of factors that I think on the longer term are going to pressure the markets eventually. Um, so maybe gold will kick off sooner or later, but it's you don't want to be starting with a diving into the action with a small stop and continually getting chopped around. Um, so that's it. Let's just take a look at some of the gold stocks here. They're not doing too flash today. DCN, that's especially just after today, I'd say that action is looking more like it's going to head lower. That's, I don't know how to say it, Dacian gold. Saracen heading south. That's not looking too flash hot at the moment. The weekly chart, yeah, it's been going up. A massive pullback from the highs. Your lows around the $2.50, sorry. Sort of your key to the uptrend. I'd say that uptrend, it really got a bit of a blowout move to the highs. And when you get those blowout moves, you get a deeper correction, generally speaking. But it's going to have to find a base. I mean, if we start taking out 250, that uptrend, is going to be in a bit of bother. But that sort of matches what we're seeing in Aussie gold as well. Until Aussie gold starts to break out to the upside, then you wouldn't expect any of these goldies. You're going to get the initial buying. We get a $5 rally, then a $10 rally the next night. Of course, you're going to get a little spike into gold stocks, but generally they're heading south at the moment. That's back to that. So that's not looking good at all. DCN. This is on the weekly chart. It's probably going to have, it looks like it's ready to, we've got an interim high at the moment around the $1.60 mark. It's going to start pressing lower in the short term, just see if we can start hold up. We need bids to start stepping in, maybe 80 a dollar. Still means a 35 cents below here, or they could press in here, and then it's going to take out the highs. If it doesn't take out the highs, then forget about it. If it starts building a lower high, it's heading south. Just forget about standing in the way of that for a moment. SBM, Santa Barbara. No reason to buy that now on the weekly. Same on the daily, not looking good. The weekly trend, you go key lower high, we're down in that support zone, a potential support zone of say 250. No sign at all that it's going to hold up just at this stage. And then you flick it down to the daily, still no sign at all. Lower highs from that high at $4, that key lower high, will come down in support, but we're still holding lower levels. So why bother buying that at the moment? Northern Star, yeah, it has lifted, but that trend still hasn't backed off. There's a level right up at $12, and I think this level here, if you can see, right sort of where we are now, a little bit above where we are now on the daily, just above 10. What's that level? High 1018, say 1020. If that holds, we start backing off and then we break through below, say 960, 970, then it's going to go back down. You would expect to start testing towards 9 and see if some bids can start stepping in there. It looks like it's taken a bit of energy to get up there to 10 from oversold to overbought. Now up here, we haven't really broken the anchor, and that's just the anchor to this leg down from the highs at 12. And in conjunction to that, you've got this big correction off the high. So yeah, okay, sooner or later it's going to have to, there's an argument you said it's a good level to buy, but if Aussie gold looks like it's heading south, there could be a better level to buy in the near term. So you're better off just waiting until the price action says it. And I guess this price action is going to start building and showing for a buy when Aussie gold's showing for a buy as well, is starting to break higher. So just let it work its way out, especially with the goldies. What's that? New EVN not looking great. The one we were looking at is Perseus, and that kicked off. I know someone in our chat room got that. Looking all right. I think it's Vin. Got that, and I was looking at that. I just didn't expect it to break up, for honestly. In all honesty, gold wasn't doing too much, and it took off. You got a bit of a run when gold ran up, and it's just gone bang right up to close to, what is it, $1.08, thereabouts, backing off, obviously. And that spike high is going to be led with some profit taking, especially if gold's down, Aussie gold's down. It's good pressure going to be on the downside. It's just whether it can pull back, hold a higher level, bounce off the MAs. I think it takes some time, but if you haven't got into that at 90, yeah, then you probably just wait and see what happens when it retest the MAs, it starts to hold off those MAs. If it doesn't, it could plow straight through. You don't want to get in and out pretty quickly with a stopped out as well. Sorry, just having a sip of the coffee. Any questions, guys? What I'll do, now there's one SLR, I think it's got some work to do, but it's getting there. There was one Oz Minerals. I think Oz got copper as well. I mean, if you look at that, longer term trend, the weekly's up, it keeps getting you up to the highs, corrects lower, wash out a lot of people. But that trend, ever so slightly is over time is heading higher. It's just whether or not, I think to buy it here, you'd probably be under pressure at some stage, some good pressure. But I think over the longer term, yeah, it'll come out in front. But whether that longer term's 2 months, 2 years, who knows? But it's just that weekly, the daily, that's sort of compressing. And you've had, so last time it was oversold. We're way down here. All this, the time when it went from oversold to overbought, we traded right up to $11. So from 9.10 up to, or $9 up to $11, a $2 rally. And then we've gone from overbought down to oversold. And we got down to only 10.30 or 10.25, say. So it is holding up. And if it can hold these highs, and you just want to see that sort of that volatility compression, by volatility compression, I mean, I'm just going to get up a little drawing tool. I mean, you've got a market that's pressed up. Oh, let's just take that off. I don't like that one, do I? Market's pressed up, and then you're getting, a good pullback, another good rally, but not quite as good as the first one. Then the same with the pullback, not quite as deep, as hard and fast. It just means that there's uncertainty creeping in, so you get that volatility compression in the market, and then you're just really looking for that breakout. And if it's bullish, you just wait till the break at the most recent lower high. And especially when you got that compression and volatility or compression and price, it comes to that point of agreement, then you want it to break out through a high, because if you just sell it, or you just buy it on the low down here, there's no reason to say that it's not going to just bounce back up. You're in profit for a day or two, then boom, straight down, stop you out. Or if you don't like stops, you're sitting on a massive loss for a long time. So you want it to break to the upside through a lower high, or if it starts breaking through some of these, when you got something like that, it takes out this low, then just forget about it and just watch it, take it off the radar for a while, or just watch it for a while. But that's what, if this can do that, you can just get it to squeeze in a bit more, high lows, lower highs, compress a bit more. And then what it does also is defines your entry a lot more and your risk a lot better. And then you can just, play it from there. But either way, it's gold's not looking too crash hot. You want gold to do something that could break the upside. If it doesn't, it could keep compressing, or it could just take out that low and have a deeper correction, like just a big pullback. And then it sort of goes more into the weekly, there's highs on the weekly. Okay, we've had enough. It's going straight down. It's going to reset at a lower level, 950, 960, below 10 even. Then you got 65 cents lower from here. So you'd rather just sit and wait and wait for it to set up. SLR, your weekly. Yeah, I don't like, because that pullback has been contained, okay, and then it took off, and then you had that sort of press lower, big flush, and then sort of turn that V shape straight back up, and it rejected, it did the reverse. If you can see, took out the high, gapped up, took it out, finished on its low. So it's not super strong just for now. I would like to see a bit of time come in, and the fact that it's up on, the highs up here, and stochastics taking a bit of energy to get it from $1 up to $1.20, and then you got that washout. I don't think it's ready just yet, but it's definitely. I mean, there would have been people stops above the high, above the $1.20. I mean, at that stage, say on this red candle, you've got to know where your risk is, and the only place for me where you're going to be proven wrong that's not a bullish uptrend is down here. And what's that? 20, 30% fall? Do you really want to 30% on something? Or have a really wide stop? If you get 1-to-1, you need it right back up to the highs, $1.50. And it's asking quite a lot when gold's not moving. So you'd rather have on something like that, get that compression, take it when, if the market's trading, the stochastics for me, the pressure in selling has gone from overbought down to oversold, yet it's at a higher level. then see if you can get a bit of an entry or take a candle entry. By candle, I don't mean normally what I'm looking for is entries like this off price action, but your candles, you can have a couple of candles like that, say on this downtrend, and you're looking for a break. Say you're looking for something like this, but you want to sort of front run that move a bit. Then you're just looking for maybe 1, 2 candle to turn and take it. Okay, this candle doesn't take out the low, takes out the previous day's high, and then maybe on the second candle takes out the high. Then you go, okay, put more risk here. It's going to be a lot tighter. By the time I get up here, I might be way up here, front run them up for a bit. If it doesn't rolls over, I take a small gain or break even trade. And if the front run didn't work, does that make sense? So you're sort of looking that for me, I like the breakout, take out the lower high because then it's a good sign of strength. But if you want to front run that a bit, you can use your candles, because a couple of solid days they've taken out the previous day's lows or highs, is a good sign, especially when it's sort of turning from that downtrend. It's a couple of good green days, it starts to lift again, then it's potentially. And if it doesn't, the idea is that you can put your stop below that day's candle. If it breaks that there, you can put your stop. Sorry, I'll just take a step back. So that's your entry here. Just take that off, that one, that one. So at that stage, you go, okay, the market's opened here. I want to put my entry above there, my stop below. On the second day, it goes in, triggers you in, and then hopefully it should ideally keep doing that. New high, new high low on the daily basis, and then you just follow your stop up potentially. And if it gets something like this, you get a breakout, you should see that sudden spike because you've got everyone else that's trading off that structure, support your move, and it kicks off. All right, so that's it. So, yeah, like I said, just kick back and wait on this one. Down 5% today, you got no rush. Gold has to prove itself first. All right, let's go into some stocks. I've got CL1. Put in anything you want. I want to just want to kick off. I won't go into the currencies. So we've been putting up through currencies through TradingView, and it's been going really well. Pound, I think, is still in our favour, from where we said to get in. Choppy, but it just continues to power up. I mean, it could all change come the elections, but we'll see. If there's anything you want to look at, just chuck it into the chat. Just checking out what's going on here. Got 2 of them turned around on us. It's no fun. CL, is that 1? Class Limited. It's going up. Your daily chart's going up. Just look at. So really, if you're long that, are you long that, Jane, by any chance? So the first thing I always do, just look at the bigger term trend. It doesn't mean you don't get in just because the weekly looks it's a bit like this one, for example. That weekly is a bit extended. It doesn't mean anything really. It just means that for me, the way I look at that and go, okay, the trend's up. I know that. On the daily, if you flick it to the daily, that trend is up. You're looking at that there. Until that breaks, okay, I'm bullish. All right. So you just have to bear it in the back of your mind that, where do you want to put your stop? What do you want to risk? Where's your risk level going to be? And you have to know where your risk level is if you're wrong. So if that's the case, that weekly, yeah, it could look. It's getting ahead of the MAS quite a bit, and it is, it's overbought there. Nothing to say it can't stay like this overbought for a while, for the next, couple of months while the price is going higher. Not said, but there is that probability that as it gets ahead on the weekly, same on the daily, anytime it gets ahead, people are going to look at it as being overbought and either not step in or take a profit. It's just a numbers game, and how many people are going to decide to do that to whether there's a pullback or whether it's going to get supported. But that's going to happen. The higher probability, the further it gets away the MAs. If it just has a good spike up to say 250 from here, it's further away from the MAs. So that just means that as you're going higher and stronger without a pullback, the probability of a pullback is going to go higher with it. And that's my view. It's just whether or not you're going to put risk into it if it's new, or you're just going to leave it and wait till it reset itself. But that's just from the weekly chart. So if you're already long, you could be long from here. Perfect. If you're watching this big washout, I'll draw it up. Just from here, for instance. There we go. So you can see, at that stage, if you were looking at that, you go, okay, support, we bounced off, retested, didn't go through, some buyers stepping in, okay, didn't lift very high, so there's still more sellers to come, touched through, and you got, especially on this day, it opened, tested through, touched a new low, big washout, and big reversal. So that candle there alone has just knocked a lot of that selling. It's just changed their mind instantly, with that day. And then you can see in here, get rid of that, dismiss. That is a cracking entry. Because what you've got is that reversing candle, and then you tend to get um, bullish action in clusters and bearish action in clusters. I just read that the other day and I thought that's good. I'm going to do that. Oh, by the way, we're doing a talk 2 nights time, webinar at 7 o'clock. You can get the info from TradingView or just email me if you want the links. But I like that little saying. So you can see when you got that good positive day, you got that bullish action, and that green candle, good candle just here. It's generally followed up by another day, and then you're going to get people go, well, it's bounced off the support. Yeah, great, but it hasn't quite proven itself. I've seen this happen before. I've seen it pop up. Yeah, it's had a good trend down, but is that really? I could have thought that around here, and it's come down. I could have thought, oh, look, we go, boom, straight back down. I could have been thinking that here, good green candle, boom, straight down we go. In here. So there's so many times you can prove where it's done that. It's popped up, and then people have been cleaned up, especially through here. You got here's looking great. You can see that channel is good sell off here. Boom, boom, boom. Up, consolidate through here, broke through. People would have bought it. I mean, this is why I steer clear. I want to see that first pullback. What happens on the first pullback? Sometimes I miss the first pullback, but more often than not, it can keep me out of trouble. And by first pullback, I mean, say this is broken up. That's a clear level. It's a clear level to everyone. Don't forget. Say back here, I'm just talking about that little break up through there. Clear level, so you know that. Everyone knows that. And if it breaks up there and then can't kick on with it and starts to come back down, anyone who's bought on the break is going to be in the red pretty quickly. If there's no buyers left to support it, it's not going up, it's going down. It's as simple as that. So what you're looking for, you get that break up through a level. The first pullback is what you're looking for to see what happens. If it doesn't pull back and it just goes straight down like we did here, then you're not in. It's just, it's pretty straightforward. But if you're in and you're seeing it getting supported, then okay, there is still a lot of buyers on the sidelines ready to jump in, ready to support that for me, and they think it's going higher too. So I'm not the only one. So it's just a weight of numbers suggesting the bulls are going to be in charge. So that's where you're looking for entry. That's where I generally look for entries like that on the first pullback and retest, or just a high low. So if you look at it here, the first green candle, second green candle, yeah, it's kicked on. That's why they tend to pause. But then what you've got is the market's gone sideways. It backed off. So you got the short-term traders, intraday, or the overnight traders, they might hold a position overnight. They might buy it on that first day, hold it, get out. It's just that short, sweet trade they're looking for. But that's sort of that initial buyers there, that provide the liquidity that are quick to get out. They're the first ones to get out. So that's probably why you get that's generally why you get that first red candle. And then what happens after that? Then there is some buyers willing to buy it off that support because it's touched 1, 2, 3. 3 times. The more it touches the support, the less chance it's going through. Or the same on the resistance, the more it touches it, the less chance it might go through. It needs to pull back and take a deeper pullback before it runs higher again. Excuse me, just give me a second. Okay, so I've got a feeling Jane was saying somewhere around here she got it. So cracking entry. And this is your weekly as well. So that there, we'll go to a daily chart. Just drill on that. That's nice. So you've got that washout there, finished it above, takes off the next the next week, sorry. And then the week after that, it comes back, consolidates, holds this level. That's a beautiful level. MA is up. If you go back to the weekly, MA is potentially is ideal that it could cross. So if you're looking for that leg up there, and you're looking in here for an entry, then you just at the very minimum you're looking for an extension of that, a couple of good weeks up, which did that before it took a pause, but just kept going after that. So great. So that's your entry on that chart, I'd say. So if you're up here looking for an entry, that's what I'm saying about, if you're new to it, you're just looking going, oh, look, it's getting a bit extended. Whereas, say, Jane, if she got it in here, she's got all the room to move in the world. So she can have a slightly, looser stop level, but, still making sure you're locking in some gains. But leave it a bit looser than others. Whereas if you're buying it up here, you're not really going to have a loose. No one wants to go buy then straight under pressure straight away on the first correction of that weekly, because it could be a correction, it could be the complete sell-off. You don't know that. So if you're looking at entries here on the daily, potentially you've got your risk just below 190. Got a little gain locked in, could go high, could come and stop you out. You don't know yet. But if you get another couple of days where it tries to go through the highs and then fails and starts to take out the low, okay, bail, let it reset, and just look, because eventually that weekly chart's going to probably start to kick in. The buyers are going to start to get a bit heavy, might get a bit sick of holding. Um, yeah, look, there's sometimes, I mean, there's a lot to be said about the psychology of trying to hold on to a gain and the psychology of trying to lock in a loss. And that's what I want to just touch on a bit with on the talk on the webinar. Don't get me wrong, everyone feels it. You can't say the pros are pros, they don't feel it. You do. When you got to remember SPT, remember, if anyone remembers, is it Split It? When that took off, we're sitting on a nearly 100. Well, I think all in up, we on the second portion of the trade made 100% on that. And that was a real short space of time. It just took off. But there was kind of no reason for it to take off. So you do get jittery. You always get jittery. You go, oh, should I lock it in? And in hindsight, the partial exit was way too early. Did book 20%, but, you know, could have booked, 50% on that first one and made the result a lot better. But it's just that jitteriness. You see those good handy gains there and you want to lock it away. You want to take it off, but who's to say that it's not going to continue higher? And you watch this one go from 210 to 310 or 410. You don't know. You want to be proven wrong. So you want to see, yeah, it's getting heavy up here. I mean, the weekly's looking a bit heavy, potentially only because of that stochastics. But like I said, who's to say that the MA is not going to catch up with it? Who's to say that the price has to come back to the MAs? It could be that it just goes sideways from here. You don't get stopped out. And then it consolidates at these highs between, say, 220 and 210 and 230, or even 205. Say above 2, your risk could be at $1.90. It consolidates above 2, holds above 2. The weekly stochastics go, down to 60%. So it sort of comes off that overbought territory. The price doesn't really go anywhere. It goes sideways. And then all of a sudden, it's looking strong again. It's looking strong for another move, because the idea is that when it goes from oversold to overbought, there's sellers. That's just sellers coming in, taking control, pressing it down. The pressure is down. Okay, but if price doesn't move, somebody is soaking it up, or the sellers are not smashing a bid because they're scared. They're just going on the offer, get it taken out, maybe a bit on the bid, leave some on the offer, a bit on the bid. They're not aggressively selling. It means that they're not in any concern that they're going to get smashed and they're going to lose their profit really quickly. I hope that makes sense, but it's that psychology of what's happening and what you're trying to read into stochastics and the price together. That's not just that's oversold, get out, because it's got to do with the price. Like back here, look at this. We get up here, we're getting to oversold. We're oversold for a couple of, is that a weekly? Couple of weeks. I'm bailing, and then the very next few weeks, it rallies hard, and it's still overbought. So just because it's up there does not mean that it's going to pull back. You have to be proven wrong, and the only way to be proven wrong is with price, not your stochastics, not your MACD. Even volume. Volume is a good heads up. Even the volume picks right up, but the price doesn't go anywhere. It just means that the buyers are willing to pay up for it. And if they're willing to pay up, and the bulk of them are willing to pay up, then the bulk of them are getting long at higher levels, and the bulk of them think that it's going to, it's going even higher than that. So that's why it's good just to sort of take all that into account and try to read into it what's going to happen. Where's my risk level? If I think that sellers are starting to take control, where am I going to be proven that, if they break to a certain level, where's that going to prove to me that they are taking control? And I'd rather be out on the sidelines reassessing it, but not giving up the opportunity for this thing just to keep going. I mean, that could, like, say, consolidate, have another spurt higher, get up to 280, react off 280, hold another higher level, get to 3, take out these highs. There's just so much opportunity that we can just continue to go. So that's the idea anyway there, Jane. But I hope it makes sense. Any questions there, guys? So what I might do is just, is there anything else you want to quickly look at? IRE. Sorry, Pete. Oh, we'll do IRE. So with this one, there's a few things to note. I mean, the fact that it's broken through, this is the thing. I think you could be looking at that pay. I think it's, look, Iris, it's kicking on. Let's just go back to the weekly. The weekly, unfortunately, it's going from below the MAs to above the MAs to below the MAs. Now it's above the MAs, so it doesn't. Whether it continues back up to 1450, it could just roll over from here, come back below the MAs, something like that, or back below, retest, go again. It's kind of choppy. The longer term trend is up. You get these sort of deeper washouts quite easily, and there's sort of that daily. If you're looking at, this is the weekly, looking at the daily, it's drifting higher. Okay, lower high, presses right. It's a deep pullback. It's not something you sort of want to hold on the daily, buying it up here without a stop way back here, because you're going to take a big risk. It's quite wide risk on it, and then you just assume that it's going to hold up. So you don't want to take too much risk when look, I'm trying to say, too much risk on any one trade when it's not a real euphoric market. This thing's not. I mean, that trend up's been going since 2012, just it's grinding up. Nothing spectacular. I mean, you could, if you bought it in here, what's that? It's $7, $10, $13, you're still holding it. Yeah, you doubled your money, but it's taken 1, 2, 3, 4, 5, 6 years. I mean, to double that money, just say you put 10 grand into it, 20 grand, 100 grand. Yeah, it's now at 200, but that 100 grand you could probably make better use of over the period of 6 years. I mean, how many stocks have taken off? You get 50% gains in a month or less, and then go take it out and restart for another one for 100%. So all of a sudden, in a couple of months, you've made your 100% on your 100 grand or your 10, 20 grand. So that's what I'm saying. When you get these sorts of trades, these sorts of price action, which is grinding high, and then it flushes you out, you sort of want to steer clear of buying up on the weekly when it's sort of up towards the highs. It's in that top 30% or above that, the 50% mark, I guess. So that move from low to high, 50% somewhere around here, and if it's above that, you maybe just want to steer clear. But just take a look at it either way. So where it is at the moment on the weekly, it's getting a bit overcooked on the upside. So it's just saying that when last time you went from oversold down here, we were up at 1050. Sorry, around 1050. Got all the way to overbought, and this move up took out the previous high, took out a few highs, and it's into new high. And then we had your pullback, from overbought down to oversold again. Okay, again, $11 as opposed to 1050. So that's what I'm saying. That it's not a solid trend where you want to throw too much money at it, because that retracement of this move up is nearly 100% retracement, just under 80%, 90% retracement, and I don't like that. I'd rather see consolidating the highs, 20, 30% retracement, consolidate and then go again. That's euphoria. That's the weight of numbers in the buy side, as opposed to buying it up. A lot of people come to selling it back down, buying it back up, selling it back down. Just hard to make some serious, some good solid gains. But either way, you've got that good pullback. Now we've gone from oversold, we've gone back up to overbought, but we're nowhere near 1450 on the weekly. So it's sort of suggesting there's sellers starting to edge into the market here. Doesn't potentially mean, you can do something like this. See, we got to overbought here, below $14. Let me just make that. On this, before we had this green candle, got smashed, got bought back up. So we sort of had this bit of a pullback and then got bought it back up, took out the high on the next little pump back up and overbought. It doesn't mean that can't happen. So that's why you got to look at that and go, oh, look, it is sitting on top of the MAs. Don't mind that on the weekly. It could lift. It could be charging up to 1450 quite easily, like we did back here. Excuse me. But what's happening on the daily? And if you go on the daily, we can get that a bit nicer. This action to me is more consolidating. So I would rather see buying again off a high low. And a high low, it's pretty clear that you've got this leg up and it's gone into sideways price action. Boom. I know we've traded above there today. We gapped up, traded. It's a strong market. It's gapped up in the open. Retail have opened it. There's no, pros, I guess, at the moment are willing to buy it up at these highs. So it could just back. So what I'd be looking for, the fact that it's breaking through those highs, I wouldn't mind seeing it's broken up through a high. Say it falls below today, finishes below. I'd rather see pull back. If we can do something like that, a higher low, and then buy it, that because we can consolidate back to the daily MAs, not go straight back below them, but consolidate back on them, say around $13 at a high, slightly higher level. That could be a bit of a heads up that, okay, we are going to make that move right up to, was it 1450 or 1460? Then you've got a bit of a trade on your hands with 2 to 1 or 3 to 1, as opposed to buying on the break there with your stop has to be below and hoping that you're going to get up here. So 1 to 1. Does that make sense? Okay, Gino. So I hope that makes sense anyway. So that's what is that? Iris. We'll see. I mean, the other one that's like it, what's it? Iris PPS heading south. So not the greatest of things to be looking at. I actually didn't mind that one up until a few days ago. So you don't want to see these big pullbacks. You want to see something, if it pops up, you want to see consolidate. So if you ever, so that's your leg up. If you just break that into thirds, as a general rule, that's the way I break them into thirds. A pullback into the top third is a good sign of strength. So the deeper you pull back, the less strength that move up's going to, the less chance it's going to continue on. It doesn't mean it's not going to, but if it pullbacks, if it's, hang on, let me spit that out. If it pulls back but holds within that top third of the leg up, which is this leg up, holds in the top third and chops around, which actually this is on the daily, that's a good sign of strength, because it means that buyers who bought it up here not willing to get out, sellers are not diving in, any new sellers, new buyers are starting to flow in at this higher level. They're convinced that this thing's going a lot higher, and they're happy to take a chance on that, the top third of that leg. That's great. But when it has a deeper correction, it goes into that, the next third down, say a 30% pullback or 60% pullback within there, and starts to chop around. That's not such a strong move. It just means that buyers in here are wanting to get out. So the deeper it pulls back, the more sellers that are jumping, or the more buyers that are jumping out, have to close out. And why? Because they're not convinced it's not going higher. So if it starts pulling back in this bottom third all the way down here and starts to hold a minor higher level, you want it to see it do more work, in all honesty. So this thing caves in and comes right back down to 1160 or so. I want to see more time being supported to chuck my money in it, into it. Does that make sense anyway, there, guys? So just try to stick with, I guess, it's a Fibonacci thing. You can have your Fibonacci levels, but I don't think they're anything really. I don't put a lot of emphasis on it. It's easy to say, look, it bounced off the 618 retracement. So yeah, but that's, you can only know that in hindsight. Look at that one; it went straight through the 618 retracement. So horses for courses, but I wouldn't look at that. I'll stick to sort of that 30% rule, 30, 60. Same on the highs when it starts to rally. Look at this one; it rallied from low to high. It's probably about a 50% retracement. It started to go again, and it went, consolidated, and go. So this is a beautiful little spot to enter in here. Nice spot to enter. I see that as a nice spot, starting to hold some higher levels, and then looking to get a bit of a run on. So yeah, I think that's probably about it, guys. I hope that was a good little explanation. Any information that you can make a bit of use of that. Any questions, feel free to send me an email to support@tradesetup.com.au, and I'll get back to you. And remember, we've got that webinar. So it's just me talking again, me on a bit of a rant, but I'll have a bit more of a planned and organised rant with a few pictures to help out. But it's not just going to be stock-based. So if you're just looking for some stock tips or anything, it's probably not going to be worthwhile. But in a way of trading, I'm going to talk about more theory behind the trading with some examples, some futures, some indices, maybe a couple of currency examples and some stocks, but just to show you what price action we're looking at, why, a few different tips and tricks, I guess. But that's on Wednesday at 7:30. So yeah, any questions, feel free to, before that, if you can't find the link for it, just email me and I'll get back to you. All right, guys, enjoy your day. 23 at the moment, so we've crept higher since we've been talking. We'll see how we go by the end of the day, see what happens over the next few days. Anyway, enjoy your day. We'll speak to you again soon. Bye.